Hi there, welcome to Kneppy Invest and welcome to the 20th of November 2024. There is about 1 minute left in the closing auction today. Now, the reason why I have started recording this video a little bit later than usual is because I have just recorded the stock of the day and also the small cap of the day. So yesterday I recorded those two videos after my ASX daily rundown video, and I thought today maybe I'll do the other way around and record those videos before. Anyway, I'll talk about which two companies I have chosen as the stock of the day and the small cap of the day in a minute or so. Now, overall, today has been slightly negative. It may be even more than slightly negative. So XJO down 0.61%. Small caps down 0.85%, and even resources down 0.39%. So the agenda for today's video will go through the ASX today, looking at the best and worst performing sectors, indices, and also companies. No top 5 stocks of the day, but I do plan to talk about 6 or so companies in today's video, including Sayona, Piedmont, Emeco, DGL, Plenti, Maida, and Webjet. Which Webjet? Webjet Group. Share price down 9.78%. Might discuss a few other companies as well, but those are the companies I do want to touch upon. I'm even planning ahead for tomorrow's small cap video. I have 2 possible companies there, including Matrix Composites and Singular Health. I haven't thought about whether I should ask you to give me a company that you think should be included in small cap of the day, but I think I'm going to leave it to the day. Because I'm going to sort of base it on any sort of interesting announcement a company or small cap company might have released either that day or the previous few days. For instance, Singular Health did release something interesting today, and Matrix Composite released a presentation, which I did have a look at and I was intrigued by it. Okay, so let's get stuck into it and have a look at the ASX today. By the way, I'll have a look at some of your comments if I have time. Okay. So let's have a look at the ASX today. So not a good day. Not only is it not a good day, notice that the XJO and XAO have both dropped during the day. So consistent dropping through the day, maybe because a bit of negativity in Asia, maybe because the American futures are down, but we don't like to see this, to see the market down through the day. That's actually quite negative, quite bearish. Now, when it comes to sectors, a couple of sectors up, utilities up 0.36%. In fact, in the last week, utilities seems to have an absolutely wonderful week, up 6.86%. Even IT up 3.32% is well behind utilities in the past month. Utilities had a good month, but it's really in the past week. The utilities have had a really good period. Healthcare up, so healthcare's had a troubled week on the other hand. Yeah, there's healthcare down at 3.14%. So maybe a little bit of a bounce in some healthcare companies today. Otherwise, IT, discretionary, real estate, telecommunications, energy, and industrials all down by more than 0.75%. Gold's had a good day, up 0.67%. So a few days, maybe 3 days in a row, the gold's had a good day. But other than that, everything is down. Now let's have a look at the XTL or the ASX 20, down 0.46%. So not as bad as the rest of the market. And it looks like there was a slight bounce on the close, particularly in the XGO and XAO. Not much of a bounce. Nothing like we saw yesterday, by the way. So yesterday when I was recording, the market was up by a fair bit. And during the last, say, 10 or so minutes of trading, the market went from being up 1.5% or something like that to being only up 0.8%. And that's actually quite bearish. So I'm not surprised that we have seen a negative day today because that negative sentiment actually, wouldn't say translated, but rolled over into today's session. Okay, let's have a look at the ASX 20. I would say 6 companies up, 14 down, just having a, or 3 up. So which 3 companies are up today? CSL, healthcare, a bit of a bounce. Fortescue and CBA again, just ridiculous. Why is anyone buying CBA right now? It's weird. So I know what some people are going to say. It's the ETFs, that sort of thing. Maybe the super funds buying CBA. They don't care about valuation. They're just buying it because of the name, that sort of thing. Anyway, and the worst performing company today was Brambles. There you go. Aristocrat, Leisure, Telstra down 1.78%. So not much of a defensive company there. And QBE, I was thinking or am thinking of just trading QBE. Share price did break out the other day. And maybe we'll have a look at the chart because with this little bit of a dip, maybe I should be thinking about, maybe I should have thought about team position in that company today. Okay, so let's have a look at the best and worst performing companies today. The top gainers and the top losers. A company called Naria Metals, up 80%. The tick code is NYM. And when I see NYM, I think New York Mets. Not New York Yankees, but New York Met. That means this company's tick code is easy to remember. Did they release anything today? Absolutely. High grade REE. Is that rare earths? And scandium results at Rocky Gully. Don't hear much about scandium. What is REE? It can't be rare earths. That's too simple. Must be something else. Is that mineral sands? What's mineral sands? Anyway, so as this announcement takes a bit of time to open up, we can have a guess what REE is. It should say it's somewhere here, surely. High-grade REE. Extensive high-value scandium, magnet rare earths, ND, PR, DY, TB, gallium, and vanadium. Total rare earth oxides and magnet rare earth oxides. Okay, that's interesting. And I don't know what REE stands for. They don't say it. They just use the acronym. And I don't know. Rare earth elements. Oh, there you go. Rare earth elements. Yeah. Okay, that makes sense now. Do I like this announcement? No idea. How do I read these drilling results? I have no idea. I have no idea how to read scandium drilling results or even REE or rare earth elements drilling results. So how did the market react? Well, the market reacted quite well. Share price up 55%. So obviously the market liked it. So let's have a look at the chart for NYM. Another company I've never heard of before. Is this chart looking good? And straight away, my answer would be no. Don't like the chart at all. Even though the share price has increased 55%, I don't care. In fact, a fair bit of selling today. Share price was as high as 5 cents. And the reason they're selling, because look at the chart. There's going to be a lot of shareholders who don't care how good the announcement is. They're going to sell because they think this company is a dog stock. And maybe it is a dog stock. Anyway, so that's Naria Metals. The second best performing company today is Singular Health. It says it's up 31.87%. Now, before I started recording this video, I had a look at Singular Health. It was not up that amount. It was only up 9.89%. So there's a little bit of selling in the last 20 minutes of trading. The company did release something interesting today. So capital raising and MOU, Memorandum of Understanding with PNS for commercial pilot. So I was thinking of making this company the small cap of the day on Thursday, the 21st of November. I'm undecided on that, but this definitely has the potential, the chance to be that particular company. Okay, what else do we have here? Nothing else. In fact, that's all I'm going to talk about when it comes to the best performing companies by percentage change. Have a quick look at my market cap. Catapult, I'm trading that. FPR released their results the other day. It looks like maybe it's bounced. Kelly Partners might be the most expensive accounting company in the world. When I say that, I don't say that jokingly. So KPG has a market cap, I was going to say like 500 million, 418 million, a PE ratio of 147.6. Every single time I look at this company, I think, is this the most expensive accounting company in the world? PE ratio of 147.6. They do or are growing by or through acquisitions, and eventually that's going to end. Anyway, what else do we have here? Oh, sorry, I just shouldn't have clicked on that. Duck Technologies had a nice little bounce. That's okay. I've sold out of that position. And there's nothing here that's triggered triggered my memory to have a look, closer look. Okay, now let's have a look at the top losers. And I'm sure we'll find some interesting companies in here. And the stock of the day, which I have done the standalone video, is PWR Holdings. Share price down 25%, understandably, because the company did release a negative trading update. So that's not a surprise. What else do we have here? Nothing. Nothing of note. So let's have a look by market cap. Neuren, yes, down, not releasing anything. That's a bit of noise. So I don't know if you can call it down 7% as noise, but the share price has turned really negative from Neuron over the last few days. There was a nice little rise in the share price, and all of a sudden the share price has just collapsed. Really interesting trading happening here. Not sure, it's like a fund manager is just dumping on market for 4 straight days. Share price got as high as $18. Now it's down to $13.71. I don't think you can say, because what's his name? RFK Jr. has been named the health minister or whatever that is in the United States. Probably one of the worst choices ever. Has been the suggestion that's why some of these healthcare companies have been sold off. Mader Group, I'll talk about that company in a second. No idea why Appendix is down 13%. This could be just, again, noise. But this is a plaything for day traders, in my opinion. And you're going to see this happen now and again. Playthings for day traders are going to climb by a large amount and drop by a large amount. And so let's have a look at the chart for Appendix. Yep. This could be a nice little buy the dip situation. Share price had gone on a run, now it's falling back. So it's gone from 290 back to 223. Would I trade this? And the answer to that is no. I could easily see the share price of this company dropping all the way back down to 50 cents. I can definitely see that happening. Otherwise, Webjet, I'll touch upon this company during the video, but there's nothing else here that I do want to talk about. Okay. So let's have a look at some interesting announcements that have been released today or last night for some companies. The first one is Sayona and Piedmont. You'll notice no trading in either company because they are merging. Piedmont Lithium and Sayona Mining are merging. Now, I haven't had a close look at this. Now, there is an announcement called Proposed Merger and Equity Financing Presentation. I wouldn't be surprised to see more of these mergers happening in the lithium space. Now, without knowing any of these companies all that well, I would have said Sayona is by far the biggest company. So let's have a look at the market cap of both companies. Now, Piedmont, I'm pretty sure is like 50 million. Sayona Mining is about 400 million. Piedmont, and I'm pretty sure Piedmont is in production. Piedmont is 357. I was completely wrong with that. Completely wrong. Maybe I'm thinking of another company. So this could be a merger of equals. I was sure, I can tell you right now, Piedmont Lithium reports, I'm pretty sure this company is in production. I'm almost certain this company is in production. Set new quarterly record for production. Yeah, so this company is in production. Maybe they're not profitable. I would be surprised if they are profitable. So even though they are in production, they're not making or generating any cash flow. So maybe this merger will trigger some synergies. Hate the word synergies. So we'll have a look at the presentation maybe later today, just to see if this is beneficial. I would assume it is beneficial. Now, one thing I did notice this morning when I had a look at the indicated price, both were down a fair bit. So there is potential the share price of both companies might drop, particularly if one company is negatively affected by this particular merger. Last thing I'll do is just have a look at the chart for both companies. Now, Sayona, I do know, it started to look interesting. Sayona is starting to look interesting. I wouldn't be surprised. So share price had trouble getting above this level right there, and it did it the other day. So the last day it was traded was on Monday, and it started to look a little bit interesting, and then went to trading out in regards to this merger. So Sayona is looking interesting. Piedmont, I can't remember what I thought of this chart. Yeah, it's starting to look interesting as well. So possibly now is the time to become interested in lithium companies. So I'm going to have a closer look at quite a few other lithium companies on the ASX. Maybe now, or maybe the tide is turning when it comes to lithium. Okay, Emeco Holdings did release their trading update, I think. No, or AGM and trading update and earnings guidance. It sounded positive. That's the vibe I got from it when I did read it. Positive. Why did I find it positive? Oh, yeah, it was probably just some of the comments made from Ian Testrow, the CEO and Managing Director. The operating environment and business conditions remain both robust, with the production outlook for gold and bulk commodities remaining positive despite weaker market conditions for nickel and lithium. We have a strong competitive advantage in the market with our rental and equipment rebuild model, along with national footprint in the key mining regions across Australia. So it did find this particular update positive, and it seems like the market has seen the same thing. Share price up almost 6%. So let's have a look at the chart for Emeco. Is this a breakout for the company? That's exactly what I'm looking for when I go through this process. Now, the share price is in an uptrend. Has pulled back a little bit over the last few months, but if I see the share price keep on going up over the next few days, that could be a good sign the share price is back into its uptrend phase. Okay, so not quite there right now because the share price at 80 cents is not at a long-term high, but it is still moving in the right direction. So good day for Emeco Holdings. Not a good day for DGL Group. Share price down 8.33%. They also have the AGM. Now, there was a couple of things I didn't like about some of the things they mentioned. Now, the chairman did say right here, if I can find it, here it is, this paragraph, the sixth paragraph down from the top. I generally prefer not to comment on our share price, but here I go, I'm going to comment on it. But I need to acknowledge that it is not where we want it to be. The last 2 years have not been without challenges, and we know the share price decline is a concern for all shareholders. I can assure you that your board shares these concerns. There was something else interesting. I think it was this one. It was this one. Apparently, some people have been asking about dividends. Why are you asking about dividends? So they had to actually mention that. We have received several questions relating to dividends. Don't know why. While we understand the value of dividends for some shareholders, our approach since listing has been to reinvest our earnings to grow the business. That's exactly what they should be doing. That's my opinion, what all these type of companies should be doing. These smaller companies that are looking for significant growth in the future, don't give dividends back to shareholders. Just use those dividends to grow the company for the medium to longer term. That's what the best companies in the world do, mostly. Berkshire Hathaway does that. Anyway, share buyback program has been on hold. Now, the rest of this particular, there was some sort of, there was a bit of a trading update here. And it wasn't that positive. See if I can find it. Here it is, the outlook. Yeah. In terms of current trading, we expect to record a modest increase in revenue and gross margins for the half year, with underlying EBITDA broadly in line to prior half year. Net profit expected to be lower in this half than prior year, mainly due to increased depreciation amortization. So some of that is because of acquisitions. Yes, because of acquisitions, the amortization has increased. Hence, their net profit is actually down from last year. So I think that's one of the reasons why the share price has decreased, because net profit is going to fall again. And that is one of the problems when you do a lot of acquisitions. Your amortization will increase. So it's not a real, in my opinion, it's not a true gauge of how the company is performing, just looking at profit. You have to look at many different financial metrics. Anyway, so that's DGL. Now let's have a look at the chart for this company. Is it still moving in the right direction? So there was some positive vibes in the chart. I'm still getting some positive vibes, but I don't think the share price can drop much more from here. And I'd like to see the share price rally from here. It definitely get up to about 70 cents. That would be a good move. But DGL, I think, we could see the share price just go sideways for a while, maybe fall a little bit, maybe rise a little bit, but that would be really good. See the share price go sideways for a period of time. And then when they come out of this moribund state they're in right now, that's when the share price can rise. When they see a bit of growth, that's when the share price can break out, because I do think there is potential. This company is really good value at current levels, and that's why I have not sold one single share. I'm ready to be really patient with this one. And when I say really patient, I mean really patient. Okay, so that's DGL Group. Company called Plenti Group, which is a loaner, a borrower, not a loaner, someone who loans monies to other people. They did release the half-year results. Share price up 2.78%. Won't go into their results. You can have a look yourself, I suppose. We just want to see how the market reacted. Share price is up a little bit. We did see it up more than it was. In fact, the share price wasn't up 10%, but it was definitely up about 6 or 7% today. So 10% will be 7 cents. 5% would be 3.6 cents. So yeah, it was definitely up about 6 or 7% today at the high, 77 cents. Let's have a look at the chart for Plenti. So this is a borrower or lender. Yeah, lender. They lend money to other people. I'm not sure who they lend it to. Now, there was a massive rise in the share price back in November last year. And I'm pretty sure, I could be mistaken, I'm pretty sure that has to do with some sort of relationship with NAB. I'm pretty sure, in fact, we can check right now. Plenti, let's go back a year. November last year. There we go. It's Plenti and NAB strategic partnership announcement. That was a year ago. Yeah, I still remember that day. Share price just rallied, really nice rally, and the share price has gone sideways ever since then. So really long consolidation period for Plenti, and unfortunately today, share price hasn't really broken out, and that's what I'm looking for when a company releases these sort of announcements. Maida Group, share price down a fair bit. I wasn't interested in this one. Down 9%. Why is the share price down 9%? They didn't release any price-sensitive announcements, but there was a change of directors' interest notice and a change in substantial holding. Now, is this the reason why the share price dropped? So Craig Burton, not sure what his role is in the company. The securities are held by Sky Alba. Sky Alba is an entity controlled by Craig Burton. So he held, or this entity held, 39 million shares. And he or they decided to sell 982,000. Not a lot in percentage terms, not a lot, but the value of those shares was about 6.6 million. And then after this, they held 38 million. Not sure why the market would panic over this. And in my opinion, when the share price down, or with the share price down 9%, that's the market panicking because some guy sold a very small portion of shares. And in terms of percentage, let's have a look. Let's actually calculate it. 982 divided by 39,000. So in terms of percent, 2.5% of his holding he sold. Why would you be concerned about that? It's not like he sold half. He sold a very small portion. And who knows what he's going to do with it, or they're going to do with his money. Maybe they're going to buy a yacht. I have no idea. Anyway, is this opportunity to take advantage of the market panicking when it shouldn't? Maida Group. Let's have a look. And I think the answer to that is no. In fact, I have no interest in this right now. Share price really not doing anything. There was a beautiful chart for a long period of time. When I say long period of time, we're talking about from middle of 2021 all the way through to middle of 2023. In 2 years, the share price of this company went from about 92 cents to $8. And since then, the share price has been doing nothing much. And yeah, I have no interest in this chart at all at this point in time. And that's the most appropriate words. At this point in time, I have no interest in this company. Anyway, and finally, we have not Webjet, Webjet Group. So we have Webjet, Web Travel Group, which is in suspension right now. And in fact, Web Travel Group delayed release of financial year half-year results. And they went into trading up the other day because, what was it again? They had to change some accounting changes, I think, if I remember correctly. Potential adjustments to prior year financial statements. And today, they've announced not only Web Travel Group, delayed release of financial results, but also Webjet Group, delayed release of first half results. That's never a good look, and that's why the share price is down 9.8%. So things are not moving in the right direction for Web Travel Group and Webjet after they have demerged. Things are moving in absolutely the wrong direction. Let's have a look at the chart for still going to get these wrong. Webjet Group. This only goes back to when they demerged, and share price has been up and down like a yo-yo. Has been as low as 72 cents, as high as $1.24. It's more nearer or closer to the lows than the highs. Okay, so that's all it has. That's all I've got when it comes to announcements today. Interesting announcements. There might be a few other ones that I might have missed. So let's have a look at some of your comments. We'll do about 5 minutes of your comments. Your Freeman says or asks, what do you mean we have to pay a premium for this company? Is there a fee for buying the shares, or do you mean there won't be any dips for this company considering its quality and will probably stay high prices. Now, there's no fee for buying. Well, there is a fee for you to go through an exchange or through a platform, like $2 through Superhero, $5 through Self-Wealth. If you're still trading in CommSec, you do have to pay a broking fee. Or do you mean there won't be any dips? Well, there can be dips. And that's why in high-quality companies, some people wait for the dips and they hope sometimes it's going to be a significant dip. There are some people who wait for recessions. They wait to see the market absolutely tank. And that's when they buy some of the high-quality companies. Now, considering its quality and probably will stay high prices. So I wouldn't say probably stay high prices. There's a chance the share price could drop, and that's when you take advantage. So premium is you pay a high multiple. So P ratio, look at the P ratio or something like that, a high multiple. And when a company proves itself to be high quality over and over again, like Technology One, there's a chance the P ratio of this company will remain high and stay high. In fact, the P ratio of Technology Group has actually risen over the past few years. In fact, let's actually do it. Let's have a look at the P ratio history of this company. So when this company wouldn't have been considered high quality, maybe the P ratio might have been 20. So let's have a look at the P ratio of this company. I don't think it's been that low. Maybe it was in 2014. But let's have a look. So that's all it means. When you say premium, you have to pay a higher multiple, P ratio, or any sort of valuation metrics. So if the P ratio was 5, then you don't have to pay a premium. In fact, I'd say there's something wrong with the business. So it all has to do with the quality, or the perceived quality might be the better word. So let's have a look at the P ratio history of Technology One via Finet Chat. I'm assuming all their numbers are right, which is could be a bad assumption to make. And this is the P ratio of Technology One. In fact, actually, we want to go back 10 years. For some reason, that's not 10 years. Why is that not 10 years? It goes back to 2016. I want to go back 10 years. Well, I don't know why. We'll go back to, there we go. Okay, so the P ratio of Technology One at the start of 2015 was 31. It was as low as 30 in 2018. And really since 2019, the low in the P ratio has been around 40. And the high has been about 60, apart from this one period where the P ratio was high. That could have been a one-off with the profit. That's why sometimes you'll see spikes in the P ratio. It doesn't mean the company was expensive at that point, just because there might have been a one-off. Now, you have seen a run-up in the P ratio of this company over the past few months. That's because share price has run up. Now it's at 80. So there is definitely a premium you have to pay for this company if you want to own shares right now, because you're paying a much higher PE than you've paid in the past, apart from this one period back in. That's what I mean by premium. You have to pay extra, extra multiple, or whatever. Anyway, that's what I mean. Hopefully that makes sense. M. Solkar, SC7WF, can you please provide your views on SRG Global? Well, I am trading SRG Global. Now, apart from the chart, I know a little bit about the company, but that's about it. I'm just trading this. And the two reasons why I'm trading this. The chart looks pretty good. Also, I thought the valuation of the company looked really good. And I thought, if this company can just maintain a bit of growth, this company has a great potential, good potential to grow significantly from here. So this was about 4 or 5 months ago. So let's have a look at the chart for SRG Global. Now, I would say, based off what this company does, it's nearer the low quality spectrum than the high quality spectrum. Now, it might be me being a little bit unfair, but it's just what this company does. Now, this chart looks amazing. This chart is stellar. Now, the company did release something the other day in regards to contracts. So I'm not the biggest fan of contracts when it comes to breakouts, but the company did release something really good. So $700 million of contracts secured with key repeat clients. And the markets loved it. Share price yesterday rose 7% on the back of this. And today, on the 20th of November, share price has increased another 4.3%. And this chart looks brilliant. There's me buying some shares back on the 23rd of July. I think the company did release something positive on the 23rd. Let's have a look. what did they release on the 23rd that really got my interest in the company? It could have been a trading update, maybe. Here it was, a financial year 24 market update and financial year 24 outlook announcement. So that really garnered my interest, and based off that announcement, I bought some shares. And then I also participated in a capital raising just after that. So you saw the share price dip back, and then they did capital raising. I think they did release something really positive on the 21st of August. That would have been results, really good results. And look at that chart, beautiful looking chart. Now, the true breakout for this company was back in April at around about 79, 80 cents. That was a true breakout, in my opinion. So that's the time I should have been buying shares. And the share price has almost doubled since. Well, maybe not nearly. It's still well off doubling, but this is a beautiful looking chart. The other thing I really like about this chart is the volume. Look at the increase in volume since August. Really big increase in volume. And that is telling me that the markets, institutions, fund managers are aware of this company and they like what they see. They are taking positions, or maybe multiple positions in this company. Okay, so that's my views on SRG, and I'm going to keep it there. I'm going to keep this video down to 31 minutes long. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.